Ian Dogan claims one cheap AI stock has 10,000% return potential. In this video, I use the clues in the presentation to figure out the stock so you don't have to buy the newsletter being pitched to learn the name. This is my first time covering Insider Monkey, so I can't check previous stock picks to check their record. So we're just going to quickly look at this short presentation and reveal the stock. Dogan claims AI is about to exponentially grow and that every sector from healthcare to finance will be infused with superhuman intelligence. From disease prediction, hyper-personalized marketing, and automated logistics that streamline everything. Dogan also says that we're very early into this opportunity, and it's like investing in companies during the early days of the internet. Then Dogan starts talking about the company he wants you to invest in and says, act now and unlock a potential 10,000% return. This AI stock is already extremely profitable. And he says, imagine an AI company so groundbreaking, so far ahead of the curve, that even if its stock price quadrupled today, it would still be considered ridiculously cheap. Our research team has identified a hidden gem, an AI company with cutting-edge technology, massive potential, and a current stock price that screams opportunity. This company boasts the most advanced technology in the AI sector, putting them leagues ahead of competitors. Dogan also says this company is trading at only 5x its earnings. I'm going to reveal my guess for the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPix. I reviewed over 100 stock picking services, and AlphaPix performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPix. So go ahead and click that link and take advantage of this amazing deal. There weren't a lot of clues for this one, but after browsing some forums and looking at everything, it seems like the stock is Baidu, ticker BAIDF. The reason the stock is so undervalued is because it's a Chinese stock, and these companies are usually very undervalued due to the unpredictable nature of the Chinese government. If you appreciate me figuring out this stock for you, just drop a like and subscribe. Baidu is one of China's leading technology companies, best known for its dominant position in the country's internet search market. Often referred to as China's Google, Baidu operates a vast ecosystem that includes online advertising, cloud computing, autonomous driving, AI-powered applications, and digital content services. While its core business is search and online advertising, Baidu has aggressively expanded into artificial intelligence, AI, and cloud computing, positioning itself as a leader in China's AI development. The company's AI-driven businesses, including Baidu Cloud, smart assistants, and autonomous driving technology, are central to its long-term strategy. Here's everything you should know about Baidu, and after I'll tell you whether I'd buy. First is the search king of China. But is the crown slipping? Baidu dominates China's search engine market with over 70% share, making it a household name, but its core ad revenue dropped 8% year over year in Q4 2024, signaling fierce competition and shifting user habits. Second is AI powerhouse. Meet Ernie, the ChatGPT rival. Baidu's generative AI model, Ernie, is gaining traction and could be a game changer, but it's still early days, and profitability remains a big question mark. Third is self-driving dreams. Robo-taxis are rolling. Baidu's Apollo program is the only fully operational driverless service in China, a massive growth opportunity, yet scaling it into a profitable business faces regulatory and tech hurdles. Fourth is cloud growth, the bright spot you can't ignore. Baidu's AI cloud revenue soared 26% year over year in Q4 2024, showing promise as a future cash cow, though it's still just 21% of total revenue, too small to offset struggles elsewhere. Fifth is ad revenue crash. Is the cash machine broken? Online marketing, Baidu's bread and butter, is under pressure from weak small business spending and AI disruption, with margins shrinking fast. Sixth is China risk. Government crackdowns loom large. As a Chinese stock, Baidu faces regulatory risks from Beijing's tech clampdowns, which could tank its valuation overnight if policies tighten further. Seventh is dirt cheap valuation, bargain or trap. Trading at just 3 times enterprise value to earnings, Baidu looks like a steal, but that low price might reflect a value trap if growth doesn't rebound soon. Eighth is IQIYI, the Netflix of China dragging it down. Baidu's streaming platform IQIY brings in users but bleeds cash with rising content costs and competition eating into profits. Could it be a liability? Ninth is Cashpile, a safety net or a sign of stagnation. Baidu's sitting on over 236 billion CNY in cash and investments, giving it firepower for innovation. But some worry it's not deploying it fast enough to stay ahead. 10th is competition crush. Tencent and ByteDance are hungry. Rivals like Tencent and ByteDance, TikTok's parent, are stealing ad dollars and tech talent, challenging Baidu's dominance in search and beyond. Can it keep up? I personally would pass on this stock and don't see 10,000% gains in its future. DeepSeek really set the world on fire with its unexpected launch, and I see a lot of people claiming it will cause Baidu's stock to surge. But it hasn't happened yet, and the stock is down nearly 50% in the last few years. I do think China is going to be a major player in AI, but there's just too much to dislike about Baidu to bet on it. China might clamp down on Baidu, causing the stock to tank, or Western countries could ban their tech like they did with ByteDance or Huawei. Plus, the shrinking ad revenue is a big concern for me as well. I personally think Tencent is a better Chinese AI stock. I bought Tencent earlier this year and it's been one of the best performing stocks of the year for me and is up 20% already. As an investor, I love Tencent's diversified empire. It's not just leaning on one shaky leg like Baidu's search business. With WeChat's 1.3 billion users, a booming gaming division pulling in billions, and a fast-growing cloud segment, Tencent's got multiple revenue streams firing on all cylinders. Think 13% revenue growth in Q3 2024 alone. Sure, it's not immune to China's regulatory risks, but its sheer scale and adaptability give it an edge. Plus, its valuation at around 15x forward earnings feels more justified than Baidu's bargain bin price, which screams trap to me. Tencent's a powerhouse with staying power, way more compelling than Baidu's uncertain rebound story. So if I had to choose one Chinese AI stock, I'm going with Tencent and skipping Baidu. And make sure to click the link in the description to check out AlphaPix. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out AlphaPix now and put yourself in the best position to win with stocks.